Let's face it, crypto tax in the UK can be a headache. Between all the transactions, swaps and fluctuating prices, it's easy to be overwhelmed. Or worse, end up paying more tax than you actually need to. But here's the good news. The UK tax system, while far from perfect, offers a few simple tools you can use to legally reduce your Bitcoin tax bill. So in this video I'm going to share with you 3 proven strategies that could help you keep more of your crypto profits in 2025. And they're strategies that most investors either overlook or don't fully understand. No loopholes, no shady stuff, just smart HMRC compliant tax planning that anyone can do. So let's dive in. Number 1, maximize your tax-free capital gains allowance. Every UK taxpayer gets a capital gains allowance in 2024-25. It's £3,000 per person. That means your first £3,000 of capital gains each year is completely tax-free. So if you're holding Bitcoin and you sell part of it for a gain, that first £3,000 of profit is untouched by tax. Now that might not sound like much, but here is where it gets powerful. You can do this every single year. If you're married or in a civil partnership, your partner also gets £3,000. So together that's £6,000 per year tax-free. Here is a real-world example. Let's say you bought £15,000 worth of Bitcoin and it's now worth £35,000. You could sell just enough to lock in £3,000 of profit, pay 0 tax and rebuy BTC again, essentially resetting your cost basis higher over time. But wait, here is the catch. The 30-day rule, also known as bed and breakfasting, this is where many people slip up. HMRC has a rule. If you sell an asset and then buy the same asset within 30 days, the disposal is matched to the new purchase, not your original one. So in short, if you sell BTC today and rebuy it tomorrow, your gain or loss is calculated using the new price, which means you can't lock in that £3,000 gain tax-free if you immediately rebuy. So what can you do instead? Wait 30 days to rebuy BTC, buy similar but not identical assets like MicroStrategy, MSTR, also known as Strategy nowadays, or if you're married, give the BTC to your spouse who can sell and rebuy under their own tax profile. Use smartly, this allowance gives you a reliable way to chip away at your tax burden every year, especially if Bitcoin keeps growing long term. Now let's talk about tax tip number 2. And my personal favorite one. Use ISAs for tax-free Bitcoin exposure. You can't hold Bitcoin directly inside an ISA, at least not yet. But that doesn't mean you can't use your ISA to get Bitcoin exposure and still keep it completely tax-free. So here is how it works. Every UK resident gets up to £20,000 ISA allowance per year. Anything you invest inside an ISA, individual savings account, grows tax-free and can be withdrawn tax-free with no capital gains tax or income tax. Well, you can't put actual BTC in an ISA, you can invest it in Bitcoin related assets like MicroStrategy, also known as the ticker symbol MSTR, which holds massive amounts of Bitcoin, or in crypto companies like Coinbase or Bitcoin mining firms. These assets tend to move with the price of Bitcoin. So if Bitcoin goes up, these often go up too. No capital gains tax, no reporting, all yours. Over several years, if you keep using your ISA allowance to stack these kinds of investments, you build up a portfolio, Bitcoin-linked assets, completely tax-free. This is especially useful if you're already holding BTC long-term and you want a parallel portfolio that's protected from tax entirely. The third tip is about use crypto losses to offset future gains. This is often forgotten, but it's one of the most valuable tax tools crypto has. If you have sold crypto as a loss, you can report that loss to HMRC and use it to reduce your tax bill in future years. These are called capital losses and they work like credit. They sit on your record until you have a future gain to offset. Here's a simple example. In 2022, you sold Bitcoin at £4,000 loss. In 2025 you sell Bitcoin and make £10,000 gain. You apply your £4,000 of loss and now you're only taxed on the remaining £6,000. Apply your £3,000 of capital gains tax allowance and now you're only taxed on the £3,000. That's thousands of pounds saved just by remembering to report a loss you already taken anyway. So how long do losses last? Forever, as long as you report them. You don't need to use them the same year. They carry forward until you do. If you miss reporting them, you have up to 4 years from the end of the tax year in which the loss happened to notify HMRC. Just remember, for the loss, it has to be a realized loss, meaning you sold the asset. Price drops while holding don't count. Now, let me share with you just a couple extra bonus tips. Other things to keep in mind. Here are a few quick-fire reminders that could save you headaches later. Holding crypto isn't taxed. You only pay tax when you sell, gift or spend crypto. Swapping crypto is a taxable event. Trading BTC for Ethereum, that counts as a sale for capital gains tax purposes. Spousal transfers aren't taxed. You can gift crypto to your spouse and they can use their own allowance and losses separately. So to wrap up, if you want to legally pay less tax on Bitcoin in the UK in 2025, remember these 3 strategies. 1. Use your capital gains tax allowance every year and double if you are married. 2. Use your ISA to invest in Bitcoin-linked stocks like MSTR and grow that money tax-free. And 3. Claim and carry forward your crypto losses. They can reduce future tax bills when prices recover. None of this is complicated. It's just understanding the rules and using them to your advantage.